The Dow just posted one of its roughest sessions in weeks, plunging 2.19%, while the VIX exploded 13.45% to 20.66, that's fear flooding straight back into this market in a single trading day. Tonight, we're unpacking why an Airbnb co-founder just cashed out $315 million in company stock on the very day this sell-off hit, what the Federal Reserve's rate decision actually signaled beneath a headline that looked like a non-event, and why some small-cap names rocketed over 100% today while others collapsed by more than half in the same 24 hours. Let's get into the numbers. Starting with the scoreboard. The S&P 500 closed at 7,320.23, down 1.46%. The Nasdaq Composite fell harder, down 1.74% to 24,442.94, as growth and tech names bore a heavier share of the selling. The Dow Jones Industrial Average took the biggest hit of the major three, sliding 2.19% to settle at 51,594.14, the steepest drop on our board today. And the VIX, Wall Street's fear gauge, spiked 13.45% to 20.66. That's not a minor wobble, that's a real signal that options traders are paying up meaningfully for downside protection right now. Underneath the index-level pain, sector breadth was almost uniformly negative. Consumer cyclical was the day's biggest laggard, down 0.97%, as rate-sensitive discretionary names got hit hardest. Basic materials fell 0.48%, energy slipped 0.30%, and even communication services dropped 0.11%. The lone green sector on our board tonight, consumer defensive, up 0.47%, as investors rotated into staples, a textbook risk-off signal. And that defensive posture is confirmed by sentiment data. The CNN Fear and Greed Index sits at 32 today, squarely in fear territory, not neutral, not greedy, fear. Our top story tonight comes from Insider Watch. Airbnb director and 10% owner Joe Gebbia sold $315,911,789 worth of ABNB stock, 2,093,303 shares in total, spread across 9 separate transactions, all dated July 28. That's the day right before the Dow fell 2.19% and the VIX spiked 13.45%. Critically, our data shows zero cluster buys backing this move, no other insiders stepping in on the other side of the trade to offset it. Now, one sale from one insider doesn't confirm a market-wide thesis, and founders routinely diversify concentrated stock wealth built up over years. But the timing here is what makes it noteworthy, a 9-transaction, $316 million exit landing right as broader market fear was visibly building across every major index. For investors, the takeaway isn't sell Airbnb. It's this: when an insider of this size moves in this size on a day the market itself is flashing fear, the responsible move is to watch whether more filings follow in the coming days, not to overreact to a single data point. Story 2 centers on the Federal Reserve. Today's FOMC decision held the benchmark rate at 3.75%, exactly matching both the prior rate and economist estimates going into the meeting. On paper, that's about as close to a non-event as a Fed decision can get. But markets didn't trade it that way. The Dow, the S&P, and the Nasdaq all sold off hard on decision day, and the VIX jumped 13.45% in the same session. When a fully priced-in rate hold still triggers a sell-off of this magnitude, the real story isn't the rate itself, it's the tone accompanying it. The FOMC's economic projections, released alongside the decision, are what markets are digesting overnight, and that's exactly the kind of forward guidance risk that can move rate-sensitive sectors sharply. For investors, that means the headline number mattered less than the language underneath it. Consumer cyclical, already the day's worst-performing sector at down 0.97%, is the most exposed group if that guidance skews more hawkish than the market was hoping for. Story 3 is about extremes in the small-cap space, and today's board was a study in violent divergence. Nocera surged 118% after regaining Nasdaq bid price compliance, following a 1-for-30 reverse split, alongside news of 3 binding transactions completed in 60 days. T3 Defense jumped 109%, also fresh off its own reverse split. SciSparc climbed 70.5% on news that its Nocera lab subsidiary is advancing a quantum analytics platform. But flip to the loser board and the picture inverts completely. CleanCore Solutions collapsed 54% even after announcing an AI colocation services agreement with Cerberus Systems, good news paired with brutal price action. ARWA fell 67.6% despite an acquisition announcement just 2 days earlier. The pattern across both boards is the same, reverse splits and press release-driven pops are producing violent, unstable price action in low-float names. A headline alone isn't enough to sustain a stock's move when the float and dilution story underneath it is shaky. Turning to Congress and insider filings. House member Sam Liccardo disclosed a sale of Nvidia stock in the $15,000 to $50,000 range, transacted July 21 and disclosed July 27. Michigan's Debbie Dingell went the opposite direction, buying Federal Home Loan Mortgage Corporation, Freddie Mac, in that same dollar band on July 14. Florida's Jared Moskowitz bought Applied Materials shares, and Ohio's Robert Latta bought Farmers and Merchants Bancorp, both in the smaller $1,000 to $15,000 range. On the Senate side, Bernie Moreno sold shares of Canadian Imperial Bank of Commerce. On the corporate insider side, beyond the massive Gebbia sale we covered, Ameriprise executive William Gerald Williams sold $8,667,000 in AMP stock across 5 separate transactions. And the Hershey Trust, a 10% owner of the company, sold $5,471,000 of Hershey stock across 16 separate transactions. Notably, our data shows 0 cluster buys anywhere today, no coordinated insider buying activity to offset this wave of selling across multiple names. On earnings, there were no U.S. earnings reports on our board today, which left the market with nothing to trade on besides the Fed decision and the VIX spike. The calendar just ahead is dominated by international names. Telkom Indonesia reports August 5, with analysts modeling 50-3.11 in EPS. Alphamart parent AMRT.JK also reports August 5, projected at 20-4.61 in EPS. And Indofood is estimated at 300-80.67 in EPS on nearly 29.7 trillion rupiah in revenue. With that thin domestic calendar, don't expect a fresh earnings catalyst to shift sentiment before next week. Looking ahead, keep an eye on the ripple effects buried in today's data. Crude oil inventories fell 7.167 million barrels, far deeper than the expected 1.3 million barrel draw, a bullish signal for oil prices that traders will likely be repricing tomorrow morning. Gasoline stocks barely moved, up just 7,000 barrels versus an expected 700,000 barrel draw, a mismatch worth watching for what it implies about refining margins. On the rate side, the 30-year mortgage rate climbed to 6.76% from 6.69%, adding fresh pressure to an already weak housing trade. And with the Fed's economic projections still being digested overnight, expect continued volatility concentrated in consumer cyclical and other rate-sensitive names as that guidance gets fully priced in. Today's theme, fear crept back into this market, a major insider cashed out big, and a Fed decision that changed nothing on paper still triggered a real sell-off. Subscribe for tomorrow's market recap.